Before we dive in, I would like to introduce my groupmates, Muhammad Afizafri bin Rosano, Muhammad Amishake bin Ismajuri, and Muhammad Zarul Hafiz Ikwan bin Idris. Hi and Assalamualaikum. My name is Muhammad Afizafri bin Rosano and I would like to start with company background. Sandabi traced its root back to 1910, founded as a small British trading company. It has since grown into one of Malaysia's largest and most diversified multinational conglomerates. In 1979, Sandarbi was incorporated in Malaysia and set up its head office in Jalan Kolei, Kuala Lumpur. Sandarbi also one of Malaysia's largest multinational listed on the Bursa Malaysia Stock Exchange. Now, we will go through on Chief of Decision Making and Responsibilities. Example of Chief of Decision Making are Dr. Jeffrey Salim Davidson as Chief Executive Officer and Dr. Seri Azmi American as Group Managing Director and Chief Executive Officer of Sandabi Berhad. He is responsible for assessing the performance of the company's operating segment. This involves reviewing financial operating results such as revenue, expenses, and profitability to determine how well each segment is performing. The Chief of Decision Making at Sandabi Berhad is responsible for reviewing the performance of the group business segment. This includes analyzing the financial result of the industrial, motors, logistics, and healthcare division to assess how well each is contributing to the group's overall performance. They make strategic decisions on how to allocate resources across different operating segments. Based on the performance data, the Chief of Decision Making decides where to invest capital, scale operations, or implement efficiency improvement to support the group's long-term growth objective. The Chief of Decision Making ensures that the business units are aligned with Sandabi's strategic direction and sustainability goals. This includes evaluating risks, approving major projects, and driving initiatives that support environmental, social, and governance performance. Let's continue with type of segment. There are two types, which is business segment and geographical segment. Sandarbi have three business segments, which is Sandarbi Industrial Holdings Sdn Berhad, Sandarbi Motors Sdn Berhad, and Sandarbi UMW Holdings Sdn Berhad. Now we will go to geographical segment, which is referred to the division of a company's operation based on regions or country where it conducts business. For example, Sandarbi succeeds their business in China, Malaysia, and Australia.
How Mfrs 8 requires entities to disclose information that enables users of financial statements to evaluate the nature of financial effect of their business activities and the economic environment in which they operate. Under Mfrs 8 operating statement focuses on ensuring transparency in financial reporting by requiring entities to disclose information that enables users to evaluate the nature and financial effect of business activities. This standard applies primarily to entities whose debt or equity instruments are publicly traded or are in the process of issuing such instruments. Now, I want to discuss about the benefits of segmental reporting for financial statement. The first one is enhanced decision making, and the second is transparency and risk assessment. For the enhanced decision making, segmental reporting under Mfrs 8 provide users of financial statement with detailed and relevant information about a company's performance across its various business activities and geographical regions. This empowers stakeholders such as investors, creditors, and analysts to make more informed decisions. Segmental reporting enhance transparency by breaking down revenue, expenses, and assets across distinct business units, providing stakeholders with a clear understanding of how each contributes to overall performance. For instance, Sandarbi Berhad segmental disclosure details the financial outcomes of its motors and industrial division, enabling users to assess which division drive growth. This clarity allows stakeholders to identify whether the motors division focusing on automotive distribution and retail, or the industrial division specializing in heavy equipment plays a more significant role in the company's success. Enhanced decision making through segmental reporting empowers stakeholders to make well-informed investment decisions by concentrating on high-performing segments that promise better returns. It also enables an evaluation of the company's adaptability to shifting economic environments by highlighting the resilience or vulnerabilities of individual segments. Additionally, the detailed insight provides management accountability for segment-specific performance, fostering greater transparency and strategic focus on areas needing improvement or optimization. And then for transparency and risk assessment. Transparency and risk assessment are integral benefit of segmented reporting under Mfrs 8. This standard enhance the quality of financial information by requiring companies to present detailed disclosure about their operation. Such clarity enables stakeholders to evaluate a company's financial health and exposure to risk across different business activities and economic environments. Segmented reporting enhances transparency by enabling users to compare the profitability and efficiency of each segment, providing insight into which parts of the business are thriving and which require improvement. For example, investors can analyze profit margin across geographical regions such as Malaysia and China to determine where the company resources are being most effectively utilized. This comparative analysis helps stakeholders identify areas of strength and opportunities for optimization, supporting more informed decision making. In summary, segmented reporting under Mfrs 8 enhances decision making by providing detailed insight into the performance of individual business units, enabling stakeholders to focus on high performing segment and assess adaptability to economic changes. It also promotes transparency and support risk assessment by highlighting profitability, efficiency, and potential vulnerabilities across different regions and segments, fostering informed strategies and accountability.
I will explain about Mfrs 134. Interim financial reporting is a standard issued by the Malaysia Accounting Standard Board (MASB). This provides guidelines for the preparation and presentation of interim financial statements. It requires entities to present condensed financial information, such as the statement of financial position, statement of profit or loss, and other comprehensive income, and disclosure about significant events or changes. The standard ensures that interim financial reports align with the principles used in annual financial statements, promote transparency, and provide users with timely and comparable financial information within reporting periods. FARS 134 is consistent with the International Financial Reporting Standard (IFRS). Identify two significant events and transactions that affect an entity's financial position and performance since the end of the last annual reporting periods. The first significant events and transaction is acquisition of logistic warehouse. The acquisition of logistics warehouse involves purchasing industrial properties for storage, distribution, and logistical operations. This asset support portfolio growth, operational efficiency, and rental income, driven by rising e-commerce and supply chain demands. Per financial year end, the group complete acquiring two double-story logistic warehouse in the Bandar Bukit Raja Industrial Zone, with a combined net lettable area of 670,174 square feet. This acquisition strengthens the industrial property portfolio and supports the expansion of the group's sustainable income base. Second, launch of Elmina Lakeside Mall. Acquiring logistic warehouse involves purchasing industrial properties for storage and distribution, meeting e-commerce demands, enhancing portfolio, and generating steady rental income. The successful opening of the Elmina Lakeside Mall in August 2034 marked a key milestone. This retail development achieved 100% committed occupancy within 6 months of the opening and attracts an average of 450,000 monthly visitors. This development reinforced recurring income and enhanced the group retail portfolio. The table below shows the interim reporting period for the current and comparative interim financial statements for quarterly. The reporting period for the first quarter of the current period is from 1 July 2023 to 30 September 2023, while the comparative period is from 1 July 2022 to 30 September 2022. For the second quarter, the current reporting period is from 1 October 2023 to 31 December 2023, and the comparative period is from 1 October 2022 to 31 December 2022. The third quarter of the current period covers 1 January 2024 to 31 March 2024, while the comparative period is from 1 January 2023 to 31 March 2023. Finally, the fourth quarter reporting period for the current years is from 1 April 2024 to 30 June 2024, which the comparative period covering 1 April 2023 to 30 June 2023.